Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So we'll do our regular agenda today, market update, earnings, trades updates, and then Joe's analysis at the end. So let's get started. So you can see overall the index is all still ones across the board. You look down at the sectors, pretty much ones across the board. Real estate's kind of dragging, but still bullish. It was in five, now three, and you know, if it keeps going up, obviously you could have ones all the way across. So pretty interesting to see that. You know, pie wise, the ones have just kind of been grinding slowly higher over the last week. Same with just the pie in general. We're right around 64, so now we're close to 70 now. It's been kind of a slow grind, and that's kind of what we expected coming up into. I think the NVIDIA earnings show a lot of this is AI driven, so I think that's going to be a big thing for the market. You know, how they report and their forward guidance. More importantly, so. Let's look at market pulse here. So this is state ones and eights. So you can see this was kind of like the line, back when we were just grinding higher and higher from October. Like we pretty much got right around, mid 40s, 45, 48, 50. So we're right in that range. So if we can, hold that, obviously we can, just keep grinding higher. So, but we'll just have to wait and see. I think another kind of big thing was Fed minutes come out at 2 o'clock, and after the close, you got NVIDIA earnings. So those two things, and we'll see which way market reacts. But obviously the bearish states are you know pretty much flat line down here on the state twos. So we'll just have to see if they can see if they pick up or if we kind of maintain and do this type of thing again. The the new highs obviously are showing bullish, so that's obviously a good sign. This is moving averages. We haven't dove too much into this, but it's just the net number of all our symbols, and right now we got 4,004. So basically, which ones are above their 20-day and which are below. So it's kind of like a rapid overview of the market there, and then I think 50 is probably a little more important. Um, the 20 is more the momentum type play. So these are all obviously showing bullish, and just kind of like back here, same thing. We're just chopping along, and no cross. So if we start seeing a bunch of bearish transitions, things like that, then we can start to worry. But I think we'll get a pretty good move from the market after NVIDIA. And hopefully that'll let us know which way we're trending after that. Because after that, there's some more earnings coming, but our next earnings cycles over a month, before that starts. So just bullish bearish, obviously, from last week we're a little higher from there. You can see SPX obviously, SPY obviously has gone up, but kind of at that point, whether we can try and hang here above 60. It doesn't appear like we're doing one of these big shots up to the 80s. So we'll just keep our eye on those transition counts. You can see those every day here. So it's kind of muted. And I'd expect things to start moving after we get this NVIDIA news. So Um, okay, let's look at SPX. So it's been a good start. So normally we run into resistance up here, so we'd expect that. The top of our range right now is 5,400. So it's like we ran into resistance a little bit before that. So um, generally, we'll kind of come up, retreat a little, then make a break for the average move in here. So, but it's been good so far. Um, we've been in 11 days out of 43, so done about half the average move basically. So, we'll see if this conforms to the usual pattern, or if does something different. Obviously if we have really good reaction to NVIDIA, we could run right up into there. So, okay, let's look at the big chart. Not as too much on here. So above the 20, above the 50, above the 200, that 5,000. That was a good level. So, up to the top would be the 5,400 up here. So, so we're above everything here, and just been grinding higher, not, get this tool. So, yeah, I mean, the spacing here, I don't want to read too much into stuff, but obviously, these would be our two levels down below, the 20 and the 50 for support. Um, and then, obviously down below is bottom range, but kind of more kind of looking at the 5,400, and it's just kind of all systems go as of yesterday. So we're down a little today, but let's see. Yeah, I mean pretty much flat. Everyone's waiting for NVIDIA, so we'll just have to see what comes out of there. For I don't have a feeling one way or the other. Uh, Maybe Joe will give us some insights on NVIDIA. So Russell, and same old story. Yeah, 2112. Yeah, that was I. So just fighting that 2100. So, obviously we want to stay above the entry price here, 2064. Below that would be like the 50. That's like 2040. Um, but so far decent, 11 days in, we probably got up over 2%, probably around over 2% for the high move. Still got pretty much like a month left on average, and you got another 5% up, 4 or 5% up from here. So, but I think the big thing is it's just that 2100, getting above that. If we had some like really good report from NVIDIA, I could see this, we get the gap up above, and because it just can't break through it like normal trading apparently. So if we get like a nice gap, then it can be off to the races possibly, but not saying that's could happen, but it's just having such problems with 2100 uh, as expected. So there we are, and then down below 19. So yeah, we get above this, stay above, not like 2 days, stay above, make a good move. ideally you want to like have a nice breakout, kind of retest and then off to the races. That's kind of the ideal. Uh, but we'll see. So really, top end 2100 here. SPX top is 54. And then we got our support here. Let's see what that is. 2040. And then we have our entry price as support here. That's 2060. Um, and obviously down to the bottom is 219 is the bottom of the range. So we're 21 to 19. And if we can just keep butting up against it, I think we can break it, but nothing guaranteed there. So 10-year. Yeah, we've had a little rebound 10-year. So it's 5 days. So yeah, we got down to 4.3. So we're kind of climbing back right near the 4.5 kind of range. But anything, I think personally below 4.5, I think we're okay. We're good. Once we start climbing above there, it's real trouble. So let's talk Fed. So there has been some movement. Nothing for June, but you can see July here slanting more towards no hike. So decent movement in the percentages there. September, same thing. Everything kind of shifted. Yeah, it's kind of like the same old game. Every the 1 month, everything starts shifting more towards less cuts. Same thing here. So 53 down to dropped 4% here. This one dropped 8. So pretty much this would be the first cut as of right now if these hold. So that'd be September first cut. November similar. This thing's kind of shifting a little bit, and end of year, same thing, shifted a little. So like this is 2 cuts. So 3 cuts went, dropped like 10% basically. And no cuts went up 6%. So that'd be for the year, no cuts. So, I still don't, it's hard for me to believe that they're going to cut right before an election, in September here. So my money's on nothing till November, but it's going to be data dependent too. And, the inflation stuff wasn't horrible. So we'll just have to keep tracking how the inflation numbers keep, coming out. So, balance sheet, nothing changed. Uh, same trend line here. So, if just keep running it off. So, I think that's it. I didn't have any good charts this week. So I'll open up to questions, comments.
I have a question on this first page unrelated to the market, if you
Yeah,
don't mind.
sure.
I was going to try and test some things on this unusual option activity. I've
Mhm.
never really used the data for anything.
Right.
And I just started a virtual portfolio and I picked 3 of the top, you know, unusual activity for calls and 3 for puts.
Yeah.
Did that a couple and see how they work out, And so far they're not working, but which is good that I put them in a virtual portfolio.
Right. That's what
But I'm
testing's for.
curious if you or Joe have any suggestions on how to use this data. One way is you see someone get into a position, let's say a call, you're showing PRMW at the top.
Yeah.
Um, and you buy calls in the same position.
Mhm.
other might be you do the opposite, assuming
right,
they're going to be, most of these are going to be wrong.
right.
And I'm wondering if you guys have any thoughts on uh, what would be good to test.
Well, I
Josh,
think that exactly what you said. I mean, it's one way or the other, right? So if most of these calls expire worthless, then you'd want to take the opposite side. Um, or there may be ones that it actually is indicating a big pop in the stock. But go ahead, Joe. I was going to show them we have this in the trade scanner. I don't know if you guys have been in here much. So we have this unusual options activity. It takes a little longer to load, so there's that. But you can
Oh, I
go in
didn't
and
know that was there. Like I said,
yeah.
I've never looked at the unusual option thing. I thought I'd try and take a closer look this summer.
Mhm.
I know it's there. I
Yeah.
just never used it.
Yeah, you
and
can
Sudhir,
send
what
it.
I would
Go ahead.
go ahead, Josh.
No, I was just saying you can do the call, you can do the put, you can do both. Yeah, it just takes a little longer to load just because there's a lot of data.
Mhm.
Go ahead, Joe.
Sudhir, it gets back to really idea generation. That's really the point of it, period. We pride ourselves on being a research platform, and we're just trying to give people opportunities or ideas to then go investigate. I mean, just because the calls, it's an active call list. I mean, traders could be putting on synthetics. By itself, the fact that the calls trade doesn't mean somebody's getting bullish. So it's really just what I do, and I haven't spent a lot of time going into the individuals. One of them that I did some months ago was the company that owns the New York Stock Exchange. They had repeated kind of inexpensive, out of the money call purchases in size, and in the end they were right. Stock ran significantly, and whoever it was made a boatload of money. But to me, it's really just that idea generator. You go back in time. That's where the time machine comes in. You can go back and check previous call and put history in the unusual activity tab. So haven't yet honestly gone in and traded off of them, but I think it's a good idea for just the trade ideas more than anything.
Mhm.
Okay. Yeah, I just thought I'd give it a try in the virtual portfolio. I don't want to
Mhm.
put
Well,
real money in it until
if you got time to kill, you can go in here. I mean, we got to fix the speed here, but yeah, you can go through and do the different
different trades.
strategies.
Yeah.
Mm-hmm.
Yeah.
Yeah, this is super slow, so what to fix this so it's usable.
And the criteria, as I think is 3 times the average daily volume. That's what gets you on the list.
Yeah, and the average is I think a 20-day rolling average use, right?
Yeah.
Exactly.
And but it doesn't. I mean, you have to look a little bit deeper on where there's like it doesn't give you in the table like this volume went into the July expiration of 190 call.
That's where you just got to go into the option chain, and you can track that down in a heartbeat, and then see whether the open interest expanded or contracted. But yeah, the next step is to go into the option chain and see where they bought or the call or the put.
Right. Right. Anyway, I just thought I'd throw that out there for discussion. I don't have any answers. I'm just starting to look at it.
I had used it in the past, when I was trading more actively, and did have some success with it.
And what did you trade specifically?
You know, handful of symbols, you know.
No, I mean, like, let's say you saw unusual call activity on symbol X. What would you,
Yeah.
what would you actually trade? Would you buy calls on X or would you buy puts on?
Yeah.
You know,
Well, let's say, you know, I had a bullish approach. More typically, I would do a vertical spread, sometimes a diagonal.
okay.
Not, you know, very seldom would I just buy naked calls.
Mhm.
Here's the strike of interest for whatever this is.
Yeah.
Symbol. Yeah, it's December 1750.
Yeah. I don't know what
Yeah, I
that
don't,
symbol is either.
right. No. Yeah, I mean,
And Sudhir, you know, what, you know, my approach, you know, you put it on a watch list, you look at the chart, you know, if there's, and then of course, at this point now we incorporate, you know, state modeling. Is it a good state modeler? And if it starts to go a particular way, to me, it just, it boosts my confidence, the likelihood that I'm going to be right getting along.
I agree with you. I would not, in the real account, buy just long calls or puts. You know, I would do a spread. But the virtual portfolio, I just started doing calls just because it was easier. So, calls and puts.
Mm-hmm.
okay.
Thank you.
Yeah, thanks, Sudhir. All right, anyone else? Questions, comments, anything in general, platform or market related? Okay, we'll go through earnings real quick. Same story. Um, we got one open here. I think we had one loser, 5 winners, and then we got one still open. I think it says only a couple days left, so probably end up losing on that. But overall, up a little there. Obviously, we're down on the bullish pre-runners. Only had one bearish as a winner. Bearish runners, those have been pretty active. So we got 4 open. Yeah, one up slightly. Yeah. So we had 2 close out, Fang and Fox. So these are fairly new, so we still got some time with these. So if market rolls over, these should all do well. Vol rise, I think 3 came out this morning too. Had 2 vol rise, so these will close right before their earnings. So you get another week for Costco and Foot Locker. So, and then I think, yeah, the other 3 all were profitable. And then non-mover. So we've had 2 losers. F&V did not come back. I don't know. I think it's actually max. So we're down overall. I think overall we're down a little bit. So Q1 has not been good. So not horrible or anything, but just not a good one. So I'm ready for Q2. Any questions on that? Okay, I'll turn over to Joe for Joe's analysis.
All right, Josh, thank you. And everybody, thanks for joining. You know, Josh has always covered a lot of stuff there. And we will focus on the video, but yeah, it's just pretty astounding, you know, when you see all of the ETFs, you know, in a bullish state and 10 of 11 in one. And, you know, as Josh pointed out, you know, whether it's the ETFs or the index is up above, we got lots of time. And we've been talking this, we got lots of time in these state ones in everything. So I would frankly be surprised if we got a sell-off on the NVIDIA earnings, but we'll know in a couple hours. Can't wait to see. As Josh pointed out, we tiptoed, I think, above 70 one day. We're basically at 70 now. That's not an extreme. So yeah, let's just see where we get with NVIDIA. And here, I just want to run a few retracements, just looking backwards, and then we'll talk about, expected numbers. If you go back, basically, the thing was relatively sideways for quite a while, and then at the beginning of the year took off. From that perspective, we got a nice retracement in that April sell-off where, it was fast, but, it was pretty significant top to bottom. I mean, a couple of those, days were big bar, not necessarily getting long down there, but, we got a retracement off of the January low, and we got even a more significant retracement. I pulled the line from the last earnings, which was, I think, February 21st. February 21st. So as you can see, NVIDIA had sold off into the earnings, and then away we went. And those earnings, were basically 15% better than what the street expected. Okay. I think we came in at, let me see, it was basically 15% better. Sorry, let me make sure I have that right. No, I'm sorry. Okay, so yeah, confused a little bit between. So last quarter, they were looking for 421, and we got 491. Okay, so it was 17% above expected, which was the low end, frankly, of the last 5 quarters. But you're talking about $4 a share versus a year ago. The beat was 40-some%, but they were expecting 61 cents versus $4.21 last quarter. Okay, so obviously the percentage of the beat has declined as the actual numbers have increased dramatically. But last quarter, the numbers came in 17% above the 421 expected. It sounds like what the street's looking for now is $5.65. Okay, so $5.65. That is versus, again, same quarter last year, I believe came in at 88 cents. So the magnitude of the growth is staggering, as is price of the underlying. So looking for 565 on about $24.5 billion dollars of revenue. So and that compares to a year ago, $7 billion in revenue. One of the key, I haven't heard it in the last few days, but over time, I guess the margins obviously are critical, and we've heard about margins in the 70% range for NVIDIA. So that's going to be obviously a big part of it. And something I picked up today, doing some research, of the $24 billion in revenues expected, $21 billion comes from their data center business. So I think the percentage of profit, in that data center business is critical. Looking for 565. If we were to get, let's say 15%, on top of expected, that would take us to 650. So just in terms of a range of, maybe possible numbers. you know, from a state modeling perspective, we got time and room. You know, we've got another 30 trading days, and from a current an average move perspective, you know, we've got darn near 20%. So there's plenty of room there on both fronts. You know, I pulled up the one of the semiconductor indexes, and you know, this thing has been forming well in a state one, banging up against some you know, targets here. But 20% of this index is NVIDIA. I think next is Taiwan Semi at 12. You got Broadcom at 8, and then everything else is below 5. So it's, you know, in a way, a proxy for NVIDIA. That's SMH. Any questions on NVIDIA? Be interesting to see, you know, where we can go. So kind of, and I don't think, like I said, I don't think there's going to be any meaningful sell-off from their numbers. I would expect their numbers, you know, to beat. You know, by what extent, you know, couldn't guess. But just want to run some numbers, picking up on what we were talking about last week. And we're, let's see, the S&P right now, what are we? Just, I think, a little over 5,300. Let me, yeah, 53, in the 5320 range. So, you know, if NVIDIA is going to move the market forward. Oh, one other thing I did want to, you know, talk about, you know, in terms of the response to the earnings last time. Let me grab this one here. We, you know, it basically had the earnings, you know, on February 21st, and it was pretty much straight up for 12 trading days. Okay, you then got, you know, little back and fill before the market rolled over and went down. So, you know, in the range of, it was 12 days to the high. You had another 12 days, so 24 days. The thing stayed pretty constructive, but we got more than 2 weeks of an up move, you know, in terms of NVIDIA after, you know, the knockout earnings. So I just, you know, simulated the S&P where we are, talking about this 20-day average, which, you know, has been increasing by about, you know, 10 to 15 points a day. So if we get good news and, you know, NVIDIA goes up and the markets follow suit, and figure we got at least, you know, 10 to 15 days to the upside, that would take the 20-day moving average to about 5,300. Okay, and you know, as we analyzed last week, the distance above, you know, that 20-day moving average, you know, ranges really on the low side between 150 points, the high side 225. So we could be talking about an S&P range somewhere between 5450 and 5525. You know, that intersects a little bit, you know, I guess with target 3 in terms of state modeling. Target 3 would be 5482. So, you know, if we're heading north, I would say 5450 to 5525 in the S&P is a reasonable target over the next, you know, 2.5 weeks. That was kind of the market. You know, Microsoft, always important. You know, we talked about it, just rolled into state 1 last week. I think the day before the meeting. So, you know, always wanted to keep an eye on, still have room there, you know, in terms of getting to targets. And then I just wanted to pull up, Josh is always focusing on, you know, the rates, 10-year, here's TLT, and that's a pretty good trend line, you know, with TLT. And I don't know whether we're going up or down around that thing, but I think it bears watching. So, and from a time perspective and state modeling perspective, you know, it is in 7. They're short cycles. We've had lots of them. You know, there really hasn't been any move at all. But then, you know, the likelihood, bottom right, of the next expected state, you know, it's a coin flip. whether we're going bearish or bullish. So, you know, I guess obviously the market will tell us from a, you know, numbers that are coming out perspective, something to drive rates. You know, I don't know that there's anything, you know, they're actually, we got new home sales tomorrow. Friday, there are retail sales, durable goods. You get the Michigan sentiment numbers. So, you know, you do have some numbers on Friday, and then it's not until Tuesday where we get the Schiller home building numbers. I think some of the numbers that have been coming out, you know, suggest, you know, maybe a softening economy, but you know, a lot of these companies are just making a ton of money because, you know, prices are high and the margins are excellent. So that's what I had. Happy to take any questions, talk about anything you might want to talk about. We'll pass it back to Josh. Nobody.
All right. Well, thanks, Joe. All
Sure,
right.
Josh.
Well, if you know, last chance for anyone before we close it up. Questions, comments? Otherwise, we'll see you next week. Anyone? All right. Well, thank you all. Do it again next week.
Thank you.
Thanks, guys.
Yep. Thanks.
You're welcome.